Hello, this is Mark from tradinginform.com and welcome to this video on how to get better trading exits. In particular, in this video I'm going to be having a look at how we can exit on market strength in order to improve the returns of our trading strategies. Now, before I get into the video, I'd just like to direct your attention to the fact that there are links and further information below this video, so please do check that out. And also that there are lots of videos already and they are regularly updated on this site, most of them about using quantitative techniques to improve your trading results. So please hit the subscribe button if you'd like to get more of these videos. Okay, so on to this trading strategy. I'm going to look at this by using a real example of a trading strategy. And I'm going to be using a nice simple one here. It's a trend following type strategy. And I'm using this line here, which is the linear regression line. I'm going to be using the linear regression line as a filter. When this is pointing upwards, as it is on the screen at the moment, I'll only be entering long trades. If the line was pointing downwards, I would only be entering short trades. Now, an entry to a trade is triggered by a retracement. So if we say that this was a high point, I'm looking for a retracement in this direction for a long trade, and then entering and looking for the trend to resume. Okay, a nice simple strategy. I've got no stops and no targets at all for this strategy. But I'm going to be looking at what would happen if I added in two different types of exits on strength. Now, the first of these is quite a simple one, and one that just about everybody is already using, and that is profit targets. But I wanted to look at whether it will actually improve a trading strategy like this, or it will actually lead to a reduction in the returns. Now, the second of these I'm just calling the strength exit. And what I'm looking for in a strength exit, I can show an example here. So we have an entry at this point here. We have a relatively flat market, but the trend is still pointing upwards. We have a small retracement and we get in somewhere around the close of this day. Now we can see that we had a couple of days of not much, and then we have 1, 2, 3, and in fact 4 bars, nice and green bars, at which point we would exit the trade if we are using this strength exit. Now I'm going to analyze this. As I said, I'm going to do it quantitatively, and I'm going to do it using this spreadsheet here. Now, this is for those of you who might be interested in testing your own strategies. This is a trade informed backtest model, and using these backtest models you can test all sorts of strategies, different markets, different time frames. Let's put any technical indicators you like in there, and you can use them to test long and short trading strategies. There is a link on the screen if you'd like more information about these trade-informed backtest models. Okay, so I'm going to look first of all at the results of the strategy that I just described. So I'm using a 30% retracement buy and sell level. So I'm looking for the market to retrace 30% off its recent high or low before a position is entered. We can see over here on the left the capital of the trading strategy compared to the market. And you can see that it shows up pretty favorably, really. We don't have anything like the severe drawdowns. This is from 1990, so you may recognize the dot-com bubble and bust, and then also the credit crunch, Great Recession, and subsequent recovery. Now, the strategy here has a few ups and downs, in particular at this point here when the market was relatively choppy and relatively flat. But on the whole, it's proceeded reasonably upwards. Now this isn't a bad strategy. We've made a good return. We've only got 9 winning trades and 7 losing trades over this entire time period. Now this shows us we're not using any other exit, so the only time a trade will stop is when a trade opens in the opposite direction. So let's have a look at what would happen if we put in a profit target. Now I like to use the ATR, average true range, to set my profit targets. I like this because it responds to market volatility and extends and contracts based on what the market is doing. So I'm going to just set this at 5. And we can see we've made quite a difference to, first of all, what the chart looks like, and also to our results here. And I'm going to draw your attention to a couple of things. First of all, the net profit has gone up. We've got a lot more trades as well. The profit factor has actually declined, but we have a lot more trades, and we have certainly quite a lot more winning trades compared to losing trades. We've gone up to 82% of winning trades. A couple of things also that come to my mind here. We've got our average winning trade around 18, 19, our average losing trade just around 36, 37. So this isn't particularly favourable. It's not always what we want to see, but of course it's being compensated for by our high percentage of winning trades. If we look at our largest winning and largest losing trade, again we see a similar thing. Finally, the maximum drawdown has increased slightly. Okay, so what would happen if I added an additional way of getting out of this market? And this is what I referred to as the strength exit. Okay, so we can see there we've done another significant change to our capital graph. I always look at the capital graph first. It's got a lot of useful information. We can just eyeball it and see that it's changed quite a lot. Before we had something that resembled this pretty closely. We've changed quite a lot. Our drawdowns, particularly here and here, have become a lot slighter. Looking at the results, we can see that our net profit has increased again. So have to be pretty happy about that. We're coming up somewhere about twice as high profit over the period. A number of trades has increased again, so we're obviously closing and opening more trades, which is how we are able to increase our overall return, our overall profit. You'll probably notice percentage of winning trades is slightly lower than it was in the pure profit target only strategy, but we're compensated here by the fact that our average winning trade and average losing trade have become very similar, 14, 15. So they're pretty close. Also, we're a lot closer for our largest winning and our largest losing trade, although we still have a largest losing trade. So I can do any sorts of tests that I want to with this. And the only one I'm going to do today is just to take off the profit target and have a look at the strength close on its own. And you can see we get quite different results again. Good net profit, good profit factor, slightly lower percentage winning trades again, but our average winning trade has moved greater than our average losing trade. I think this test is very useful personally. I think it shows that we can introduce fairly simple ways to affect our trading strategies, in particular our exits, that for this type of strategy, this type of trend following strategy, over a long time period, we're looking here from 1990 up to 2016, so we have 26 years approximately of data. We've got a lot of information going into this back test, and over that time period the strength exits and profit target have tended to improve this trading strategy. Now we can use this spreadsheet to do all sorts of different tests. I can increase this value here, increase our minimum percentage increase per day, and get the results. I can change this from 4 to 5 days in a row, and again I can get different results. I think this test is useful for anybody looking at longer term trend following type strategies, and I think it shows at least 2 ways that we can try to increase our return and the profitability of these types of strategy. Now please do subscribe, as I mentioned earlier, if you would like. Lots more videos like this on quantitative ways to improve your trading, and for more information about the financial markets and in particular about using Excel to improve your trading, please go to www.tradeinformed.com.